it's this time of the year when the famous Morgan Stanley LuxeConsult report comes out depicting the state of the industry and the performance of its main players, meaning brands. So this year, and as you can see, well, we got slightly carried away with our good friend Oliver Müller, and we just simply didn't see the time pass by, proving that much needed to be talked about. I used to call these long formats your cigar and whiskey moment, but I guess there could be multiple cigars and multiple whiskeys with this one, or tea and biscuits if you prefer. Anyhow, we've chaptered this long video in various segments that you can find in the description box below. But in short, our discussion revolves around the performance of the industry as a whole, the situation found on the various markets, the actual performance of the top 10 brands a little bit more, and the performance of groups, and also how independents are using their niche positioning. Well, I wish you a great session, and of course this content can also be listened to as a proper podcast available on all the main platforms. Enjoy. Hello and welcome on Watches TV. Welcome at the Watches Club with Mr. Oliver Müller from LuxeConsult, and we're going to talk about the 8th edition of the Morgan Stanley report about the performance of the Swiss watchmaking industry. So thank you for being with us today.
Thank you for having me.
Always a pleasure. And let's jump right into it, but we'll start with the kind of a macro first dimension of the oversight of the industry, and then we'll dig in a little bit by brands and by regions and so forth. So overall, 2024 wasn't a fantastic year, but it's not a catastrophe either, right?
It's not a catastrophe, especially if we take in comparison 2023, which was a record year. We had a record year before, so 2024 was more kind of a normalization, but we will dive afterwards a little bit deeper. What surprised many people reading our report is that they have one figure in mind, which is the comparison of the exports. And in value in 2024, we were down only 2.8 year on year, which makes people think that overall the situation wasn't that bad, but it wasn't that good either. So
yeah, and some were obviously hit harder than others, depending on their market presence and so forth. So in terms of indeed exports, slightly down. In terms of volume though, the trend is continuing.
Very much down. That's the very negative news of all our findings, is that the volume is down by 10% on a basis which was already not very high. We were down in 2024 to 15.3 million exported watches, which more or less amounts to the total sales of the Swiss watch industry. I don't want to go too much into the details, but it's more or less the same number, because we have to deduct what we re-import, and we have to add also the local Swiss market, etc., etc. So overall, 15.3 million, down 10%. And the very bad news, and that's my forecast, is that unfortunately that tendency will go forward. And I forecasted recently that probably mid-long term we will be down to 12 million units, which you have to compare, which really is a striking comparison. 20, 25 years ago, or even 10 years ago, we were at more or less 30 million exported Swiss-made watches. We are down to half that figure.
That is quite significant. But something interesting to note is that out of the 15 million units exported, 10 million represent quartz watches.
Yes.
And this is something that people, sometimes people think that we only do mechanical watches here in Switzerland, but actually, the quartz portion of this 15 million is quite significant, because if you compare indeed, the volume's going down, but in terms of mechanical watches, okay, it's going down a little bit, but not as much.
We are more or less stable on the mechanical side since a very long time. The quartz went down a lot, also due to the competition with connected watches, smart watches. We have stabilized in since 2022. thanks to a watch called the Moon Swatch, which was the collaboration between Swatch and Omega, which was extremely successful. And the volume in quartz are, like overall in the Swiss watch industry, by the way, are due to the volume brands of the Swatch group, which are Swatch, Longines, Tissot. You find also quartz at Omega, etc. But overall, that's a good point that you're bringing up, because recently we have seen good initiatives on quartz, because we have many friends, watch collectors, who always spit on quartz, but you can do nice watches, and especially if you are in more challenging price territories, using quartz allows you to position yourself in a more favorable way.
Yeah, and I mean, and to put things into perspective, overall around the world there are 900 million watches sold. So I mean, it's almost like, you know, that's a big volume, meaning that people are still buying watches, probably there more as a functional tool than anything else, but at a very lower price point.
Yes.
So it's, I mean, the Swiss exports represent less than 2% of this 900 million watches, but they, for sure, in terms of value, those 2% weigh a lot.
We capture more or less 1.8% of the volume only, even less, and as I said before, tendency going down. Overall, watches are down as well, even the cheap watches, but as you rightfully say, it's huge volumes being sold, especially by our Chinese competitors. The prices are very much lower. The average export price of a Chinese watch is about $12, which means it's about the retail of about $30, whereas in the Swiss watch industry, the average export price is about 1,500 Swiss.
Yeah.
So you see the comparison. We are the world champions in the high end. We capture more than 95% for watches above 1,500 US retail price, but we have a very, very small chunk of the volume, and maybe we can then re-jump on that aspect, because it's not only about numbers, it's the consequences that those numbers have on the value chain.
Absolutely, absolutely. And we've talked about that already a few times here, but it's very important that the industry remains an industry. So now let's talk about markets. And let's jump directly into the big one, China, of course. I mean, serious decline there.
Yeah, China is very concerning. That's a very personal opinion. I don't know why people had expected China to restart after COVID, where they left 2019 before that terrible pandemic. I don't think China will ever go back to its luxury consumption back then, due to many reasons. Maybe I can be proven wrong. Like I always say many times, it's only when you forecast the future that you can do mistakes, because for the past it's a lot easier. It won't go back for many reasons. Xi Jinping doesn't look at luxury as something very positive. So the official position on luxury consumption is not very favorable. Then they have a very, very concerning real estate crisis, financial crisis, etc. And we had recently someone moving in the White House in Washington who wants, but he said just, I think yesterday, that he wants to cut a deal with the Chinese. So somehow it's going to end up with a deal, but it's not very favorable for the Chinese economy and by collateral with their luxury consumption. So China very much down. I don't expect the market to catch up or to regain its strength that we had for 2 decades. We have to keep that in mind. In fact, the brands which performed the worst last year are still brands relying way too much on the Chinese market. Some have still not understood that they have. It will remain an important market. Don't get me wrong. It's a huge market. People are still buying watches, conventional watches, connected watches, etc. But it's a lot less. And the booming market is the US. US was already booming before we had that change in the White House already before. But since Mr. Trump moved in, the market goes crazy. The Swiss Watch Federation has just published the numbers for January, and it seems that the trend keeps going unabated in the positive with a plus 16% on Jan. Of course, there is the base effect that 2024 for some markets was a lot down, so the figures will look better this year.
And don't you think that maybe the fact that tariffs could be imposed, so people are buying now, saying, okay, it might be a bit more expensive later on? Isn't that pushing artificially a little bit those numbers?
I don't see that, at least for luxury watches. Besides that, you know, at a certain price point, people are traveling. So if some new duties were to be added to the Swiss watches, then probably people would buy more abroad, which would be not beneficial for the US economy. That's the whole wrong assumption that Mr. Trump is making. He's pushing the inflation, etc. But that's another topic.
That's another topic, indeed.
I'm not going on that.
Indeed.
But no, I'm not. At least I don't expect in the short term the new Trump administration to introduce tax duties on Swiss watches. They have other issues. We are good clients. Of course, we export a lot to the US, and it's a very important commercial partner. So I hope we keep things like they are, and if we keep that positive momentum, we have the US making up not everything, but a lot against the downturn in China.
Regarding Europe, what can be said? And also regarding, I mean, we talk about China, but what about the performance of other Asian countries?
Yes, we have Japan, which does extremely well since now 2 years. The yen is very much down, so it makes the expenses for tourists, especially Chinese tourists going to Japan. There are a lot, and they spend a lot of money there. So that's one point which people probably forget, is that Chinese haven't stopped overall to their luxury consumption. They are consuming a lot more abroad, and that abroad currently is a lot Japan, because it's a very attractive country to visit, and the prices are much more attractive due to the low yen. There are also American tourists, European tourists going there. So the Japanese market is back full force, less due to domestic demand, a lot more due to tourist demand.
Okay.
Other markets, of course, Taiwan, the current state of mind is not really positive, so it's a little bit more complicated. We have India still doing very well. As I said here before, it's not going to be the new China, that's for sure. It's not me saying this, it's Indian experts, luxury experts saying this. For many reasons, they have very different buying patterns from the Chinese luxury consumer. But still, it's a huge market. Potentially, it's growing fast. And the interesting part about India is that it's a huge total addressable market, not only for the high end, but also for the mid-range. So Swatch Group has a good opportunity there, which they are exploiting since decades with brands like Rado, which is the #1 brand in India. And overall, the Swatch Group captures 55% of that luxury watch market, mainly with Rado, Longines, Tissot, but also Omega to a lesser extent.
Okay, interesting. And regarding Europe?
Europe, where you find tourists, business is good because the Americans are traveling a lot again and spending a lot of money. That's the positive news. So overall, the business is okay in the UK, not so much, but rather in Italy and France, where you have a lot of American tourists. The local consumption it depends on the brands, on the market, etc. Is still okay. I think that's the positive, the upside of COVID when everyone had to rethink the way they looked at the different markets and that they couldn't expect any Chinese loads of airplanes flying in to Lucerne, to Geneva, etc. Many brands had to rethink the European markets, and I think many brands have done a very good job at rebringing dynamics, at telling their sales staff, saying you have local consumer, you have to go after them because they are here, but we just didn't take care of them for years and years and years. So I'm seeing that rather positive. Now, of course, luxury consumption is linked to the overall feeling and confidence and trust that people have. If people think that it's getting complicated with Ukraine, back in geopolitics, then they are not going to spend for an expensive watch. But if they think that we will cut a deal, and I'm optimistic about that it will happen, not tomorrow, not in 24 hours like Mr. Trump promised, but it will happen. And then I think things will stabilize again, and we will have a sound business.
Still talking about trends, indeed the volumes went down, but we see something that is really interesting is this notion of polarization.
Yes.
And this has really, is become even more and more evident. Can you develop a little bit on that?
Yeah, that's tremendous. Since we launched our report, that was 2018, based on the 2017 figures. It's year after year, and it's a running joke with the team at Morgan Stanley, because basically we say, what are we going to write this year? Because it's about polarization and premiumization.
Yes.
Things are starting to change a little bit, but definitely the polarization even accelerated. We are seeing the big four, so Rolex, Audemars Piguet, Patek and Richemont capturing 47% market share. It's up more than 10% or 1,020 base points since we started our study. That's tremendous.
Impressive. Huge consolidation there.
Huge consolidation. You see, that's one of my favorite theories, is that when a luxury brand gets into a virtuous dynamic, that then everything accelerates. It's not only the top line which accelerates, it's also the bottom line. And the more money you earn, the more you can invest. The more you invest, the more you get visible, and the more you increase your sales. It's a lot about mathematics, about financial mathematics. So I expect them to continue to grow, and that polarization to continue. If we take the first 5 brands, we are at more than 50% market share. So the number 1, again, it's Rolex, number 2, Cartier, then we have Omega, then we have Audemars Piguet and Patek, and then you have more than half of the Swiss watch industry in terms of value.
Yeah, no, it's impressive.
For me, that says it all. And then you have a very dominant market player, Rolex, continues to grow unabated. Maybe we'll go a little bit more into the details, but Rolex still captures the equivalent, the consolidated sales of the next 4 of the rankings.
That's amazing.
Amazing.
Yeah. Incredible performance. Something very interesting in this report is really this notion indeed of market share. And so, I mean, we talk big numbers and things like that, but the market share kind of really represents the power and the dominance of certain brands. How do you reach these numbers?
Yes, that's the main point, and maybe I should have started with this because many people are asking over and over again, how do you do that? Where do you get the numbers? Are those only estimates? Of course, the people with the good numbers, they talk very nicely about our work. Those with the less good numbers, they say that, you know, it's just estimates, etc. You can trust me, there is a lot of estimates, there is a lot of intel going on. You have to talk to people, you have to recross many information channels, etc., etc. To cut a long story short, there is one name on those 50 publishing its number, is one name, it's Hermès. Though the Hermès people publish at the level of their watch division. No one else does it. Yeah. Swatch Group, it's consolidated on the 16 brands. So is it at LVMH and so is it at Richemont. And not talking about the private brands because they are just black boxes. But going on year after year after year, we're gaining more trust and people are understanding that it's a useful report. Even though our report is not made for the industry, that's also something I always stress on. Yeah. And we are very happy that the industry is referring to it as a referential document. One journalist who wanted to compliment me, but it was more funny for me than serious. He said that it was the Bible of watchmaking. That's, I think, way over-exaggerated, but nevertheless, people read it, people compare, people analyze, people criticize. Positive critics are always welcome. So we get a lot of numbers. We have the published numbers by the listed groups and brands, and then we have to break down. Some CFOs at listed companies help you a little bit more than others. Some CEOs are a little bit more open talking to us before we publish. That's also something they understood year after year, that it was better to come up early in the next year to talk to us. And so it increases the quality of the data. And now the methodology. All the previous reports that were done on the Swiss watch industry were always comparing peers with apples. Why? Because when you are at Rolex, before they consolidated Bucherer, it was almost 100% wholesale distribution. They had one historical boutique here in Geneva, but that was rather marginal or not significant. So we could say 100% through wholesale. So the 10 billion sales of Rolex are not at all to be compared with Richard Mille, because we know that Richard Mille sells 100% on the opposite, direct to consumer, D2C. So the two figures are not at all the same. So what do? We compare the percentage of verticalization towards wholesale and then retail. We integrate also the margin given to the retailers, if they are retailers. We calculate all this to finally convert the sales top line of every brand towards a value in retail value, which gives us the retail market shares. Because at the end of the day, the strength of a brand is how much it captures on the market.
Yes.
And yes, of course, because I have that remark all the time, yes, of course, we would be happy to have, like in the fast-moving consumer goods, we would love to have the sellout data with panels, etc., etc. Unfortunately, we are not yet there, with very, very few exceptions. In Japan, in department stores, they exchange the numbers. They say to each brand selling in the department stores how much the competitors sold, etc., etc. There are a few examples in the US, etc., but it's by way, but far not enough to say that we could have a representative panel.
And so, I mean, exports equate to approximately, let's say, 25 billion Swiss francs, to make it short, but that represents more or less 50 billion in terms of market value at the point of sale, basically.
Yes. Yeah, that's correct. It's more or less 50 billion. To put that in perspective, maybe yes, that's just a side remark. We estimate, or at least Bain, they are doing an excellent work. Bravo, people at Bain. They do an excellent work year after year with their luxury report. And they estimated in 2024 that the overall luxury market in the world was up to 1.5 trillion. And out of that, about 363 billion euros are personal luxury goods, in which you find the watches, and the part of the watches within that is about 15%. And those 15 are more or less stable.
Yeah.
So we are not growing, but we are more or less stable.
But what's interesting is that indeed the growth rate over the last 20 years, more or less, of the watch industry within this luxury sector is inferior than the average growth rate of the luxury sector in its own right.
Yes, that's perfectly right. And the other thing is that the watch sector is a lot more cyclical than any other luxury segment. So we have stronger ups, but also steeper downs, and the cycles are shortening.
Yeah.
That's not good for the business, because people, when it goes well, everyone goes nuts.
Yeah, overreacts in one way or the other.
And I'm not going to explain for the 1000th time my theory. It's not mine, by the way. It was a very intelligent man in the 1960s who came up with the bullwhip, and that bullwhip explains the cyclical part of our business.
All right, so let's dive now into actual performances by brands or groups afterwards. And if we take, I mean, the main chart, Rolex, obviously, like you mentioned before, remains at the top of the top. There's been a few important changes for them. We were mentioning that before. Indeed, before they were relying 100% on the network of retailers, and this has kind of changed last year, and could probably have further impacts and consequences, especially for those who are who are selling Rolex in their boutiques. I mean, there could be some kind of little consolidation there also. What's your take on that?
Yes, my take is the same since 10 years, long before Rolex started capturing the retail. I always forecasted that. I'm proud that for once I forecasted things correctly. The people at Morgan Stanley never bought into my story that Patek Philippe and Rolex basically were anomalies in the luxury business. In the watch industry, we are lagging back a lot. And there was one man who stepped down, who used to manage the show at Audemars Piguet, François-Henri Benamias. He said very rightfully that he was not looking at Audemars Piguet like a watch brand. It was a luxury brand, and that has many aspects to it. And one of it is that you control the temple where people buy your products. And that means going direct to consumer. You don't need to own all stores, by far not. You can do franchising, you can do joint ventures, you can own some of them, etc., etc. And that's definitely the way to go for any luxury brands. Making watches or making leather goods, it's exactly the same, because you control the image, you control your inventories, and by saying you control your inventories, you avoid gray market, which is very detrimental to the brand equity, to the brand's value perception by the clients. So Rolex, the move into their own retail came not at all as a surprise to me. I was very happy to be proven right with Rolex buying Bucherer. We decided, by the way, because I had this question all over the time, and I take the opportunity. I don't reply to every single message coming through, because otherwise I would do this from 1st of Jan to the 31st of December every year. So we decided to integrate the sales made by Bucherer of Rolex products. But just to be clear, again, we integrated the margin that was previously given, logically. We added that margin previously given to Bucherer into the consolidated sales of Rolex. Now it's estimated that Bucherer was making 8% of the worldwide sales of Rolex. I think that number is more or less accurate. It's I think, a good number. Are they going to stay there? I don't think so. They are looking for opportunities. They will further consolidate their retail, definitely. I'm very much convinced of that. I'm also very much convinced that they will partner up with Patek Philippe, because the two brands are very close, and Patek Philippe should also capture more of the margin that they leave on the table for the time being to their retailers.
Yeah, and just for regular news or info, is that obviously brands, they give percentages to their retailers, but Patek and Rolex, since they're such hot commodity, they give less than other brands also. So 8% of total Rolex sales done through Bucherer, but according to your report, 6% is done by Watches of Switzerland. So now, I mean, it's not a question of conflict of interest, but obviously one could think that you would like to put a bit more emphasis on Bucherer sales. So for the other guys, is it becoming a little bit darker?
Well, let me start with this. When I predicted that Rolex one day would capture part of their retail, everyone was telling me that I was at best crazy. It happened. And then all the questions came up, but is Rolex really going to manage that business? Of course, everyone told me that I was at best crazy, telling people that of course Rolex would manage that directly. And I was proven right, because after 1 year, the COMCO, the Swiss Authority on Competition and Antitrust, green-lighted the deal. So did the European authorities, green-lighted the deal. And I'm not going to say the day after, but almost, Mr. Dufour, the CEO, joined the board of Bucherer. So did one member of the board of Rolex, who is now the chairman of the board at Bucherer. So it says it all for me. So they are going to control a lot more. Now, is it concerning for other brands? Of course, the official communication says that they're interested to keep Bucherer as a multi-brand retailer. I'm not so sure. I think they will, as you rightfully pointed to, they will probably tend to allocate the more interesting pieces to Bucherer for obvious reasons, and that they will increase the presence of Rolex and Tudor with more shop-in-shops. Probably even some of the location of Bucherer might be converted to almost monobrand boutiques of Rolex. Maybe Rolex, Tudor, Patek, and the others will be kept as they are, as multi-brand retailers. And Watches of Switzerland, well, you saw the answer of the stock market the day after it was announced.
That was brutal, yeah.
they lost 300 million pounds valuation from the stock market. So everyone out there, any investor understood that when you are making 60% of your sales, 60 plus probably, with one brand, you're at risk if that brand one day decides to walk away. They are not going to walk away. I'm almost sure of that. Is Rolex considering buying watches of Switzerland? I don't think for the time being, again, for many very simple reasons, because the interesting part could be to capture the point of sales of watches of Switzerland in the UK, because in Europe there is nothing left. They have retreated due to their other concerns with Rolex and others. And in the US, with Bucherer and Tourneau, which are together, Rolex already masters the game.
Yeah, and they've invested a lot. I mean, Bucherer, prior to the acquisition by Rolex, they invested immense amount of money into building huge stores in the US.
That's the way Rolex will go the next few years, is more representative points of sales, less points of sales. They have already substantially reduced. Year after year, they are closing down authorized dealers, whereas on the other hand, they are increasing their presence, like at Sediki in Dubai, in Milano, etc. They have huge point of sales, but the overall number will further decline.
So for the first time in quite a few years, the production volume of Rolex has slightly decreased. I mean, probably demand is obviously still there, a bit less. I mean, because pieces are a bit more available, but it's a way for them also to continue to control this desirability. It doesn't really reflect what they could actually sell.
No, absolutely. They anticipate, in fact, and they do that in a very smart way. They have decelerated their production. We estimated that the volume was down by about 2%, minus 2%. And from my industry intel I have, is that this year they will be down even substantially more than that in terms of volume. So they are very cautious. They don't say, of course, the easy part for me is here to talk about Rolex, because they will never contradict me because they don't communicate basically. But they act in a very smart way. They are cautious. So they went down already. They are going further. They will further decelerate on the production rate. And expect the market to maybe restart second half of 26 at best. If it's before, we are all happy.
Absolutely.
But I wouldn't see why it would restart earlier.
Okay. Well, so Rolex doing good, but we won't respect in this case the kind of the order. But let's talk immediately about the sister company, Tudor, because that came. I mean, that's quite shocking actually to see how it performed in last year. I mean, it's a big drop.
Yeah, it's a huge drop. It's in fact on our top 50. By the way, again, it's a side remark on the methodology. We analyze about 70 brands, Swiss made or Swiss owned, like Lange, German brand but Swiss owned. We analyze about 70, but out of the 50 that we publish, Tudor was the worst performing brand in 2024 at a minus 34%. Of course, they wouldn't agree with that number, I understand, but they are not publishing any, so our number stays. It's due to China. It's a very still over-dependent brand on the Chinese market. You have to keep in mind that that brand, once upon a time, let's say, not even 20 years ago, was selling 90% to China. They reduced, of course, that chunk substantially, but they still...
Well, reduced or, I mean, increased elsewhere, probably.
They absolutely, yes, sorry. Yes, they increased the sales, So the proportion sold to China was substantially reduced. Yes, of course. And then they have another issue. For me, that's now very personal, and as let's say, as a branding specialist, I wouldn't have advised to do what they have done. Meaning, when they restarted seriously the brand, which was about 12, 15 years ago, they came up with very good product initiatives with the Black Bay, the Pelagos, very nice watches, very well made, very well price positioned.
Absolutely.
Now it increased, but it's still very attractive. And on the other hand, they kept those Chinese products, which are a lot less attractive, especially if you're the sister brand of Rolex. They kept that and continued to sell those mainly to China.
Yeah.
And that is not good in terms of how the clients perceives the brand.
Yeah.
And of course, now China down, Tudor down, and Tudor is down over proportionally. I would have, if I had to advise once upon a time, I would have said, let's start lower, clean, and have a global product offering. Of course, then you have maybe to adapt in terms of colors, sizes, etc. But you should have a coherent and consistent product offering all over the world. You can't do those, in French, chinoiseries, where you keep one product family for China only. And that is backfiring on Tudor. And the other main point, and I know I didn't make many friends with Tudor, and I respect their work, they do overall a good work, but the whole branding for me is very void. It's not a strong brand. There is a tagline saying born to dare. Okay, I don't know what does that means. And then they have many engagements over sailing, Formula One. Yes, the A brand pulls out of Formula One, the B brand stays there. So, you know, it's a little bit difficult to explain there why you, and then there are minor sponsors. They are just sponsor of one team, and it's not exactly the number one or not even the number 5 team. So, in my opinion, not a very good investment. So you're a little bit there, a little bit there, you're a little bit in cycling, in rugby. Then you have David Beckham, then you have Lady Gaga, and blah, blah. And I think
it gets confusing.
It gets very confusing. It dilutes the brand's message, which is already weak. It doesn't have the history of Rolex, obviously, but it still has a history. And I would rather try to focus down on the strong products they have, which are the Black Bay and the Pelagos, and build up on where they are strong. They introduced the master chronometer certification to send out the message to Omega. But now you have to live up to your claim. So if you're as good as Omega, show us. And as of today, it's not that brilliant.
And an interesting hypothesis also that you pinpoint here in this report is that maybe also Tudor, because of probably if it's a corporate structure, didn't push too much either, because they reacted to these numbers in a certain way by not overflowing the stocks on different markets, whereas maybe other companies would have continued to push a little bit, but they said, okay, we might slow down a little bit on that and clean a little bit instead of having overstocks, or stocks piling on different markets.
You are perfectly right. We should credit, I criticize, we should credit them of being cautious and having decided last year to really decelerate is a very soft word for what they have done, because from what I'm hearing from industry contacts, The orders at suppliers are down between -60 and -80%.
Yeah.
So my -34 at ex-works level, not the sell-through, is probably even very cautious. But yes, you are right. We should credit them with having the courage and, of course, the financial means of the sister company allowing them to do that. But yes, they do right. They should clean up, calm things down, and then once the market are a little bit more stable, restart on a sounder basis.
Okay, but yeah, that was quite surprising to see these numbers. I mean, it's significant for sure. So now let's go back to the order and talk about Cartier, who is still up there, still doing strong, still has a very sound product, price point positioning, I think. Tell us a bit about their performance. What's your analysis on that?
Cartier, I said it and wrote it time after time. It's probably one of the most unique luxury brands overall because it's an accessible luxury brand. It's very prestigious. It gives you the status that you're looking for with the red box, etc., etc. Extraordinary history. With Rolex, one of the two brands with the most iconic products in watches. And on top of all, they have all that jewelry. But now, remaining on the watches, one thing they do extremely well, and they are focused on doing that, is grooming year after year, one product family, and the year after another, and so on and so on. Last year, in 2024, it was the Santos Dumont, and besides that, they did the Tortue, which is a little bit more niche, more for the watch collectors. And there, they are good because they not only push on the volume side with very attractive product at very attractive price positioning. On top of that, they increase, let's say, the product credibility that they have with watch collectors, with products such as the Tortue monopusher chronograph. It's a very nice product.
And this is something that is also reflected on the secondary market because their watches hold quite strongly in general, I would say. Without even talking about the crazy things that we've seen on the auction scene with, the crash watches going for an immense amount of money. But it's good for the brand perception in terms of being a strong asset in a certain way.
They have a good value retention despite quite substantial volumes. Yeah. They are above the 600,000 units year after year. So they do a good job because if the brand is being perceived as giving a good value retention, of course that helps also on the primary market.
For sure.
And last but not least, it's one of the brands which succeeded the best at connecting with Gen Z. It's a cool brand. It's as we said before, it's accessible. And now, because we're going to talk also about the other brands at Richemont, probably later on.
Yes. A bit later on.
A little bit later on.
Sorry.
Lower.
No.
You take Cartier, you still have a Tank. I always was telling it's 2,600. They increased a little bit the prices, but let's say at 3,000 Swiss, you get a stainless steel Tank quartz. It's a Cartier watch. Yeah. And that sister brand, Jaeger-LeCoultre, that entry price is double the price. It's above 6,000. Yeah. And I dare to guess that if you have a customer in a Cartier boutique or a multi-brand retailer and you offer him a Cartier and here a Jaeger-LeCoultre, this one is double the price of the Cartier. I think the Jaeger-LeCoultre will have a hard time to make it to make the race.
Yeah. I mean, but again, Cartier, in terms of its image perception, I mean, it's more than watches. It's a pure luxury brand, even though I mean it's mainly on jewelry side and accessories and things like that. But I mean, it's a temple of luxury.
Yeah, it is definitely. It was the young people today. I'm an old one. a little bit even older than you.
Oh my God.
They forgot, they don't know, it's not that they forgot, they don't know that in fact the luxury, the way we look at it, dates back only to the end of the 1980s, rather 90s. So the Cartier that you're seeing today was rebuilt in the 1980s with Les Must de Cartier, etc. They have done a tremendous work to bring that brand back on the scene, under the limelights, and it was probably one of the first, if not the first, transversal luxury brand with
from
accessories,
glasses to perfume,
writing instruments, etc. Everyone tried to copy that afterwards, but it's not that easy. And yes, you are right, it was also one of the first brands to go D2C, so that you were in the Cartier temple and not in some obscure, sorry for the multi-brand retailers, but you are at Cartier, you are in the temple, so you have all the codes of the brand which are really nicely shown.
All right, further down the list, now still on number 3, Omega.
Yeah.
So, I mean...
So, my love mark, they try to compete, they do a good job. Let's look at the positives and then I'll come to the negatives. They are losing ground against Cartier and Rolex in the first place. That's beyond any questioning.
On every market?
No, that's the point, and not on every price point, because if you look at the price range, those of course are figures which are not published, but if you look at the price range of the entry level at Omega, where they compete with Cartier, where they compete with Tag Heuer, etc., Omega does a tremendous job. It's the 3,000, 4,000, 5,000 retail value, where they are really strong with the Constellation, with some Steamasters, with some Deville, especially in China, because it's an attractive watch. It's Omega, and it's still a very accessible price, below the 3,000 Swiss retail. There, they are strong. There, they are gaining market shares. That's the only thing where I would tend to agree with Mr. Hayek. Sorry, Mr. Hayek, we don't agree on probably anything else, but on this one, we agree. Omega is gaining market shares in the entry level. Where they are losing ground is above that, because my opinion is they did a tremendous work on the Speedmaster and Seamaster, which they regenerated. They came up with a lot of good product initiatives. The last one being the Pilot's watch at the Speedmaster. Very nice watch.
Nice piece, yeah.
The price positioning is already a little bit daring, if I may say.
I agree.
You know, I saw it in Omega Boutique in Paris, and when I saw the price tag at 10,400 euros, I thought, wow, but it's a very cool watch. It's a very intelligent marketing, price positioning, doing all that buzz up front, saying, yes, maybe we will commercialize it, maybe not. You know, everyone knew that they would, of course, start to sell it, and it would be only allocated to professional pilots, etc. That was quite a sidekick towards a competitor called Breitling. Very smart move, very good sales. So there, good job in the US especially. They are very strong. They grew a lot in the last 6-7 years. Excellent job. A lot of money invested in monobrand boutiques, in communication, in sponsorships, etc., etc. So they are the brand at Swatch Group which managed to diversify away from their Chinese dependency. They still depend a little bit more than Rolex and other direct competitors, but not that much.
And the Olympics last year gave them huge exposure.
The Olympics gave them a huge exposure. It's if I were to measure, you know, the return on investment that you have with that kind of sponsorships, it's very good because, of course, the whole world is looking. They are the official timekeeper. They have sold tons of watches during the Olympic Games at their Paris boutique and elsewhere in the world. That's very positive. But more I look at things more positive when they are over time or during the whole year.
Mm-hmm.
That's, you know, if you compare, I'm not a big fan of Formula One. I like cars, but Formula One is another thing. It's all over the year, so you can exploit a lot better during the year, and it's all over the place, all over the world. It's a circus, a moving circus. So yes, Omega, difficult. I wish they would perform better. As you probably noticed, the number 4 is very close behind.
Yes.
And I'm not so sure that...
Not exactly the same volumes, but very close in terms of,
of sales. And I'm not so sure Omega will be still number 3.
Just a side question, coming back to the Olympics. I mean, Omega have been enjoying this partnership for decades, and do you think it's completely cemented? I mean, it will last forever. I mean, because it must draw the appetite of some other big players to come there.
With the Olympics?
Yeah, with the Olympics. Obviously, it has this timekeeping dimension that is important. But do you think it's set in the stone, this one?
Never say never. But the partnership is very, very strong. Yeah. And I know for a certain that a certain luxury group based in Paris tried hard to even have more brand awareness during the Olympic Games. And the organizers really signaled that, yes, they were very well welcomed because they spent a lot of money, 150 million euros, which they paid. But the watches were off ground. Okay. So I think it will go on. It's definitely a good sponsorship.
Yeah.
Yes.
Yeah. No, very legitimizing, I would say.
Yes.
All right. So you're talking about that 4th brand. This is Audemars Piguet, which is still doing strong. I mean, despite the fact that sometimes we hear people saying, "Oh yeah, this is the things are changing and so forth." But ultimately, I mean, it's still a powerhouse.
It's a powerhouse. It's even in a year when others are lagging a lot. Of course, it's not anymore the same dynamic. And let's put things bluntly. If we take the whole product collection at Audemars Piguet, there are maybe 3 to 5, let's say 5 SKUs which are still on waiting lists. Yeah. And we know them, the Jumbo, etc. So we all know that it's not anymore the same volume of demand. Neither is it at Patek or at Rolex. But still, Audemars is performing very well this year. They are celebrating their 150th birthday.
Yeah, they will definitely leverage this, efficiently, I think.
So, and it's more the fundamentals of the brand which make me very optimistic about their future.
And I saw that, I mean, in the product portfolio, the code 1159 now represents 13% of the volume sold. So I mean, the code is there, I would say. Is that going to increase or is it going to remain at that level?
Difficult to say. Probably their goal long term is to go to 20-25% of the overall sales, which would be a major achievement because basically Audemars Piguet never managed to get out of their mono-product offering. You can call it concept offshore, but it's still a royal oak. Yeah. They never managed to do that, neither with the Jules Audemars nor with the millenary, which were all discontinued after not such a successful history. The Code 1159 is a very fine watch, very cool design. Personally, I like it a lot. I don't know. It's difficult to say. People who criticize will tell you that it's cross-selling, so you have to buy the 1159, bam, boom. I don't buy into this anymore. I think there are buyers, loyal customers of Audemars Piguet, who think that might be a little bit a fresher approach to a certain type of aesthetics. And they have done, I mean, that extraordinary, what was it called, the DR4, with which they won the Aiguille d'Or at the GPHG, which, I mean, in terms of mechanics, it's just amazing.
Yeah, that was.
And they have learned from their first mistakes in terms of products, the dials they had made, etc. So the product is at a totally different level now.
But they've been hit on the secondary market for sure, and this can have a little impact on the desirability. And but it also, I mean, we have to be honest, it went crazy.
Of course.
It was just completely irrational at one point.
You know, basically, let me state this, because hopefully we will have some watch collectors watching this discussion.
Sure.
So, I always tell people, you should not look at the last 6 months, not look at the last 2 years. Let's take the time frame, maybe pre-COVID, and let's put it at 2018, just to take a reference on the timeline. And anyone having bought a Royal Oak in 2018 compared with today still has made a very good investment. Very, very good. It's a plus between 60 and 80% cumulated, which is quite impressive.
Yeah.
It's a good investment. I dare to say that there are not many Porsche where you can expect to have such an upside, or a Ferrari, except for limited series, etc., where you can expect that return on investment. So it's a way of looking at the market. Of course, if you are in there to speculate, of course you will be disappointed.
Yeah, of course. But I mean, I find it more sound to the situation we're in now. Continue down the list, and another big player, Patek Philippe. Number of production stayed more or less the same. Well, actually the same. So roughly 70,000 watches sold. But there also a slight increase in terms of the overall sales. What do you have to say about Patek? Because I mean, what's something that's interesting and important is that Patek, okay, it's one company, but it represents almost 6% market share. I mean, it's huge.
Yeah, I wrote that somewhere that they have a higher market share with one brand than the watch division at Louis Vuitton. So that's you have to keep that in mind.
That's Tag Heuer, Zenith, Hublot.
Hublot, and then you can add up, but it's a very small part. Louis Vuitton watches, Roth, Genta, which is even that's very niche. It's a different league, but still, one brand is more than what LVMH does overall in its watch division.
Yeah,
Patek, it's like a little bit like Rolex. They are just apart. They are on their own galaxy. Of course, the talk of the day was the launch of the Cubitus.
Yes.
With a very interesting way of communicating by the CEO and owner of the brand, which I'm not going to comment here. But at the end of the day, because I had many journalists asking me, what do you think of the Cubitus, etc. By the way, I never say it's nice, ugly, whatever. It's not my role here. I analyze figures, and the results are there. I mean, the resales value on the secondary market on the 3 Cubitus SKUs so far, because they will add other ones with smaller diameters, etc. The answer is there. Now, is the product perfect? I don't think so. If you're a Patek, you can do a lot better than doing a round movement in a square watch. You can do more than 30 meters waterproofness. You can do better than 42 hours power reserve. Yes, Patek, you can do better than that, especially if you're claiming that you launch only every 25 years a new product line. You could have taken the time to do a lot better. Having said that,
Yes.
kudos to them. It sold through. Everyone complaining about them on social media, and you know, all that backlash. Those were the first people running to their Patek retailer hoping to get one. It's a nice watch. I said I wouldn't comment, but for me, it's a nice watch. I would dare to say, if I were to criticize something, I always say, if I introduce something new, it has to have a purpose. And if I look at the existing collection, for me, the Cubitus doesn't have a purpose.
Yeah.
Because we already have the Aquanaut and the Nautilus. They tick the box. They wouldn't have needed the Cubitus.
Yeah, but I mean, it shows again that sport watches are a bit more easy to sell, I guess, than going into more kind of classical, elegant type of watch.
Sure.
Not saying that it's not elegant, but I'm just saying that it's the sport dimension is still something that is really carrying. Not only talking about Patek, but overall, right? I mean,
Yes. Yes, of course. The momentum is there. It's the Nautilus, the Aquanaut, and they jump on that trend with the Cubitus. And by the way, the Cubitus allowed them to increase their average price, because when they discontinued the Nautilus 5711 in stainless steel, we were more or less at 28,500. Now we have that stainless steel Cubitus at 35,000. So anyone without having attended MIT can figure out that the margin, the bottom line, is increasing substantially.
Substantially.
Yes.
All right. Richard Mille still performing. We had also heard, people going, "Oh, it's maybe now it's
done.
It's done. It's over. People are tired and things like that." But no, it's still there. Obviously, there again on the secondary market, we see that. I mean, watches. It's very rare that they go for a premium now, but nonetheless, they're still producing 5,700 timepieces. I mean, with an average sale price of more or less 240,000 Swiss francs.
Now we are above
Oh,
that.
yeah,
We are at 270.
Oops, okay, yeah, sorry. Yeah.
With an entry price at 110.
Yeah.
That amazes me. I think Richard Mille is, just as I always says, it's the perfect execution of a luxury brand started from scratch, and where you align all the key success factors at its best. It's rare, it's very expensive, it's always makes you believe that they have just reinvented watchmaking. True or not, probably not so, but it's very nice movements, very nicely done. They are always at the forefront with new materials, etc., etc. So they are successful.
Yeah.
There is nothing more to say about that. The only limitation, I think, to their model of being rare at a very, very high price level is their limited edition of the Ferrari, the Ultra Flat.
Yeah, that was interesting. Yeah.
$1.8 million, 150 pieces. And I think the wrong number in that equation is the retail price, because at 1.8 million, even at Richard Mille, 150 pieces are definitely too many. It's not me saying this, it's the secondary market.
Yes.
Because when you see the resale prices, they are substantially down compared with retail. We are
Minus
minus 30%.
Yeah, so it's
you can push and push, but the market up there is not the market that everyone dreams of. There are not millions of people at that price level for a watch. There are a few thousands. Overall, in the above 100,000, you could say it's more or less 35,000 potential buyers a year.
Yeah. Yeah, well, it's a small club. Big enough to play with, but...
of course.
Yeah.
And overall, again, kudos, and I love the way Mr. Mille talks about his life success story, because when he talks about that, of course, he's successful now, he's a very rich man, retired, etc., etc. He doesn't want to give any interviews anymore, by the way, but with the few times he does it, then he's very laid back, and he's not saying we were the best, No, he explains bit by bit by bit why they were so successful.
Yeah, no. Well, I guess they still have momentum going. All right,
course.
now the first kind of mass production type of brand, I mean, Rolex is 1 million, a bit more than 1 million pieces per year, but I mean, Longines, again, one brand that is significantly exposed to the Chinese market.
Yes.
And, has been suffering.
Yeah,
big time.
they are suffering. In fact, they lost, since their peak, they lost 1/3 of their sales.
That's huge.
They were at 1.6 billion, they are down to 1.1. They are still in the billionaires club, kudos to them. But they definitely have an issue with the Chinese market. The volume is down substantially. They are below, we estimated that they were below the 1 million pieces, 950,000. That adds up to all the problems of the Swatch group losing their production volumes.
Yeah, but something that you pinpoint in the report, which is interesting, is that for you, they have a big potential. We were talking about India before, because I mean the price positioning of the products is I mean, to be honest, it's good. I think
Absolutely.
And so for them, they could compensate maybe more easily than others with the Indian market.
Yeah, I think so. I wish they do, and I think they have a huge opportunity there. Yeah. It's a very attractive product offering when you compare the prices. All those brands in the mid-price segment with Longines, Frédéric Constant, Tissot, lower mid-range. Yeah. They have now a new challenge. They have all those micro brands, but we'll talk maybe after that. Coming up and challenging them, so they have that new challenge. But if I were to advise anyone who doesn't have the budget of buying a piece in the thousands, I would strongly advise him to buy something which is here to stay. And Longines probably is one of those brands.
Yeah.
It's a very fine brand. Problem, to me, my opinion, it was pushed way too high, too far in terms of diversification. The Chinese market boomed, so did they. They became a very, if not the most popular watch brand in China. And now China is not anymore what it used to be.
Yeah, so a bit more complicated to ride the wave there, yeah. Next brand, Vacheron Constantin, used to be part of the Billionaires Club.
Yeah.
Has slightly decreased also. Can you explain that?
The overseas probably as a collateral of the diminished demand on the A products.
Yes.
It's not that the overseas is a B product. Sorry.
They won't take this well.
It's one of the brands I respect the most. They do really interesting, outstanding pieces. Besides that, when the overseas was launched, I did not understand why it wasn't more successful, because it took a few years. It took the hype on the Royal Oak and the Nautilus and the Aquanaut until the overseas really started. Now it's a little bit down, and that impacted the overall performance.
Yeah. Okay, you mentioned indeed availability of those highly desired timepieces. But I guess, I mean, if we compared, I mean, really further down the list with Girard-Perregaux, who had like a very positive collateral with the Laureato because people, you know, they jumped on that watch instead. I guess with the overseas, it remains still in the much desired timepieces, don't you think? I mean, it's not there to go. I mean, it's there to stay.
Of course.
Yeah.
But those are, you know, the short-term collaterals that you're seeing on the substitute products.
Yes.
It's harsh to say this because, as you said, the Laureato, the overseas, those are all very fine watches. But of course, the demand being diminished there, the collateral is that your demand goes even further down. You see the impact on Vacheron Constantin.
Regarding Vacheron still, you highlight the fact that its presence in the US has positively increased also, because before it used to be quite a bit too dependent also on China.
Absolutely.
And they managed to kind of offset this on other markets, and in particular in the US, where it has gained momentum there.
But they are still very far away from what they should be in terms of market presence.
But I mean, it's a beautiful name. It's a legitimate brand, so they could.
With what they do at Les Cabinotiers, they do the most extraordinary timepieces. I mean, what they develop as unique pieces, most complicated watch in the world. I mean, it's kudos to them. It's a very, very good brand.
All right. Still in the top 10, Breitling. Breitling has enjoyed a huge success over the last, let's say, 4 or 5 years. Not only in terms of volumes, but also in terms of marketing strategy. They are present. They have their own boutiques. They've done quite a fine job at that. But this has kind of slowed down also. As if they reached kind of a peak. Can they continue? Is it going to decrease? What's your take?
Let's start with this again. Fact: they haven't had any growth in 2023, neither in 2024. Okay. First thing. Second thing, their growth is due to a good part previously to the capturing of the margins that they were giving to distribution and retail, and they integrated a lot. They integrated almost all the wholesale structures, and they have opened up 280 monobrand boutiques over the world. So of course this allows you to increase a lot your sales, no other than what Mr. Benamias had done at Audemars Piguet. Of course, there is a part of organic growth, and that's also the case of Breitling. Will it continue to grow? I'm definitely convinced of that. Mr. Kern, the CEO, is probably one of the, if not the, but I'm going to say one of, to not bother any of my friends. But he has a very clear vision. He has a clear roadmap. When you talk to him, and I have the privilege sometimes to talk directly with him, he's very clear on where he wants to go, how he wants to go. He built up a brand. And he's saying one thing which is very interesting. He says, when you turn around the brand, because it was the case, it was not that they had lost all success, but it was a little bit, with the clients were getting older, and it was always the same thing with the Navy timer, blah, blah, blah. And Mr. Kern is saying following. He says, when I turned around with changing the logo, adding new product lines, repositioning the brand on different pillars, not only about aviation, etc., I took the risk of losing some of my clients. Now, I don't remember by heart the figure he gave me, but basically he says, I lost about 20% of the historical clients of Breitling. And he says, I understand why. The guy who was in love with Breitling, with the old Breitling, can't understand why Kern is coming and he wants to change everything. But on the other hand, he gained a lot of new customers, younger customers, customers coming from other brands and being made loyal to Breitling because they saw it as cool. The boutiques are very well done. And honestly, when you go and visit Breitling boutiques, there is a real concept. It's a real retail concept all over the world, and it's cool. It's very nicely done. The overall brand, I talked about another brand where I said it's void. Not going to name it again, but they should look at what Breitling has done. I mean, it's amazing what the whole team around Mr. Kern has done there. And the results are there. Now, everybody is saying, no, they are not growing anymore. It's already, you know, no, I don't think so. You will see that when the market turns right, they will restart. Their biggest challenge, and Mr. Kern is a very intelligent communicator. He always says, you see, we already achieved this and that without China. The true story is that he is still nowhere in China. It's maybe 5% of his sales. Of course, potentially it would bring a lot of growth, but first of all, you have to manage to become someone on that market, and that will be very tough for him because he's against Rolex, Omega, etc. And Omega is a very, very strong competitor in China.
I could imagine. All right, we're not going to go through the entire list
now.
Otherwise we're here for a little while. But so we're going to now focus more on, and we'll still be going to talk about individual brands, but through the group's perspective.
Yes.
Okay. So let's talk about Richemont.
Yeah.
And before, maybe you could recall us, you know, the structure of Richemont, because they're not part of. I mean, the brands are part of one division, and so maybe just a quick recap on that.
Yes, you have the jewelry maison where you have mainly Cartier and Van Cleef and Arpels, and you have a little bit of Buccellati, but mainly you have Cartier and Van Cleef. So those are apart. Cartier, as we said before, outstanding, both watches and jewelry. Jewelry in recent years was growing a lot stronger than watches. Watches caught up last year. That's another positive. Van Cleef does also very, very well, even though it's a lot smaller than Cartier. And then we have a group which they call the specialist watchmakers, where you will find the likes of IWC. That's complicated. That's I can maybe elaborate after
we will.
that.
We have to.
Jaeger-LeCoultre, another tough one. Panerai, not very brilliant. Baume & Mercier, I mean, there is not much to be said. Even though it's a fine brand and it could be turned around, it doesn't fit into the group's culture.
But that something has been said for the last, I don't know, 15 years, 20 years.
Yeah.
Seriously, I mean, we've.
But you can't enforce the group to sell the brand.
Apparently not, and no one can. No one can. No one can.
Unfortunately, and then you have a brand which I like very much, which is called Roger Dubuis.
Yeah.
Very fine brand, which could do a lot better, but which is flying under the radar for other reasons.
Seems a bit lost now, but that's my understanding.
They are lost in translation since quite a few years. It's not because they are making bad products. It's you don't understand the brand. There is no presence anywhere, so you don't see, you don't hear, and if you don't hear and see, then you forget about the brand.
Yeah, strange. So overall, Richemont is. besides the 2-3 big names, big players, overall,
Vacheron was a little bit down, but Vacheron is performing still overall very well, and it will continue to do so. I'm not concerned.
But let's focus on Jaeger and IWC.
IWC, for me, it's a brand which moved itself out of the market. The prices are too high. The brand purpose is not any more clear. When Mr. Kern, the famous Mr. Kern, who is now at Breitling, he had done a tremendous job at really focusing on aviation. They went away from that for reasons I never understood. Now they're coming back into that. But in between, they are talking a lot about sustainability. There are a lot... you see that the CEO is very good at brand image. He spends a lot of time on the design of their shops, on the booths at Watches and Wonders, etc., etc. But I would advise him to go back to the product, and for even they have launched a cool product, I think this week or last week. You like it or dislike it, it's not the talk here, but I think it's a nice product. Problem, price positioning. Other brands have been very aggressive to take away or to come on the same territory, and the main one being Breitling, where you had Mr. Kern, he knows IWC inside out. Jaeger-LeCoultre. I said before, Omega is my love mark. The second one, if I dare to say, is Jaeger-LeCoultre. Apart from Laurent Ferrier. Hi, Laurent.
Why is not on the list?
No, it's not yet. Okay. They are working on it. No, Jaeger-LeCoultre, a huge history of watchmaking, a legacy on its own, an iconic product, the Reverso. But they are lost because it's not that the overall marketing is bad. Don't get me wrong. They have taken a lot of good initiatives with traveling exhibits, with workshops, with all kind of things. Then they have appointed some brand ambassadors. I personally, I don't quite understand how he fits with Jaeger-LeCoultre. Probably it's a good communication agency who sold that idea to the CEO. I think it's not working. They should get back to their roots. They are watchmakers. They are serious watchmakers. They should regenerate the whole master line. It's nice. I love it because I'm an old man, so I love that it's a very classic design, very nice movements. But for young guys, for a guy 25, 30, he looks at a master at Jaeger-LeCoultre, says, "Ooh, that's boring. It looks like my grandfather's watch, even though vintage is in."
Yes.
But, and now, yes, that's an interesting one. Doing vintage is a very complicated thing because either you mimic vintage or you do a reinterpretation of vintage.
Yeah.
And one man who does that at perfection is called Laurent Ferrier. He gets the vintage spirit and he redesigns it with just a touch of modernity. And the other one who does that even better, if I may say, sorry, Laurent, sorry, it's François-Paul Journe.
I was going to say,
François-Paul Journe, he ticks all the boxes because he takes all the codes of classical traditional watchmaking back to the 17th century of French watchmaking, and he makes a contemporary product.
Yeah.
And I think if I were at Jaeger-LeCoultre writing a brief for the product designer, I would say, let's try to do that for the master line.
Yeah.
On the Reverso, the challenge is that the price is now quite high for reasons I don't understand because they have all the manufacture in-house. It's getting complicated. It's a square watch, but why not? It belongs into any serious watch
it's
collection.
an iconic product, for sure. You can't...
If you're a serious watch collector, you must have one reversal in your watch collection. It's one of the finest watches overall. I mean, it's unique.
But coming back to that price increase that you mentioned, is that, I mean, you're in a trap afterwards.
You're in a trap.
I mean, you can't go take it down.
Yeah. Or you go down by restarting a new product family. Yeah. Let's say we do the master, whatever you call it, and you restart with something which is more accessible at very interesting prices, which in terms of aesthetics would be very much differentiated. And there you come up with an interesting new product proposal at a different price point. And then you get those clients back. Because I do understand that a young client looking, there is one product which really struck me. I liked it at first sight, love at first sight. It's a chronograph. It has a full calendar. And I looked at it and I said, wow, that's an interesting product. But then the rationals strike back on me. And I say, 17,500 by heart.
Yeah.
For that, it's unsellable.
Yeah.
It's unsellable. Why? Because it's more expensive than a Daytona Rolex.
Yeah.
It's much more expensive even than a Moonwatch at Omega. You know, anything you would compare with is cheaper. Of course, then the guy tells you, yes, but it's a full calendar, chronograph, manufactured movement, etc. Yes, but... And that's, you know, when you're in a volume brand and you're into business, you have to think of who is going to be attracted by your product offering. You can't just do what you think is good. Of course, there are other people who will tell you that you should never get any input from the market, that you should do what you're doing. Okay, that's the Royal Oak was done out of a very good thought about what could be the next big thing. You know, it was not so much the design. It was coming up with an integrated bracelet at a very high price, stainless steel, sport chic, etc. Blah 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 blah, and the rest is history.
It's history. It's a positive history for some, for sure. But so, what you just mentioned about Jaeger, okay, it's not the same type of brand. I mean, Jaeger has, of course, a huge watchmaking legitimacy. I mean, it was used to provide movements for so many different brands. It's been, I mean, it's, I don't know how many hundreds of, I think it's 900 calibers that they have in their drawers. I mean, indeed, it's a powerful machine. But indeed, increase the prices, the problem of desirability and so forth, which lets me rebound on another brand of the Richemont group that we didn't even mention, but is facing some of those same difficulties, Panerai.
Panerai, yes, that's a very complicated one. My base questioning would be, does the brand bear the upside potential that Richemont probably thinks it has? I'm not so sure. And of course, anyone, especially all those watch specialists out there, and on LinkedIn there are many thousands, they would tell you that there is a brand called Rolex, which is a mono product brand, and another one which is called Audemars Piguet. The problem at Panerai is that it's a recent brand. I mean, from the restart, it's a young brand, and that in that short time frame, they have changed so many times their strategy that they lost the people. And now I go back to what Mr. Kern said. If you turn around the brand like they did at Breitling, you can't do halfway through. Either you move forward and you do the full story, and then you are opposite 180 degrees. And of course, back there, you have lost some people. You have to accept that. But Panerai did exactly the opposite. They did a little bit, then they came back, and then they moved again, etc., etc. complicated one. I don't know if they still have the potential to regain the paneristi.
I think it's it's been complicated, that part for them. So in the Richemont group, those brands, part of the specialist, no, what do you call it? The
Specialist watchmakers.
Yes, specialist watchmakers. Sorry about that. So you have a few strong players that are offsetting maybe even losses from some of these brands over there, but the Richemont group is doing pretty well. I'm talking about their stock prices and so forth. They've announced for the last quarter of last year some pretty positive numbers.
Absolutely.
Even actually being more favorable than what people had expected for them. So, I mean, there's still hope for Richemont.
Absolutely. Yeah. Even though one could think that they should focus on some businesses rather than others. Yux Net-a-Porter was not exactly the best idea. They lost 5 billion with that. It's a tragedy. It's tragic. There is no.
Well, now I'm thinking. I mean, one of the positives is obviously their new CEO. I think he's smart enough. It'll be interesting within the next couple of years to see his impact on
No, Richemont is definitely on a positive path, and they have their homeworks to do. They have still, as we said, we mentioned the brands where they have homeworks to be done.
Piaget, of course, a lot of homework to do there, but it seems to be.
But Piaget, again, there are a lot of positives there, both watches and jewelry, the legacy in the watches,
Absolutely.
etc.
Absolutely. No, they're very legitimate, that's for sure. Other group, LVMH. There's been a lot of reshuffling between CEOs and so forth over the last few months, I would say, over there. There's a big will of indeed developing the watch division of LVMH, which interestingly enough, there was something that you pinpoint in this document, is that in comparison to all the other sectors of LVMH, actually the watches is the one that hasn't been performing, I mean, not very well for the last 30 years, basically.
Yeah.
It's
even worse than...
So for people that really know how to manage brands, develop them, manage the distribution and so forth, it seems that the recipes that they can apply, whether in the alcohol sectors, fashion or whatsoever, doesn't work in the watchmaking.
And that drives them mad. Yeah, that's sorry. That drives them mad because, as you rightfully say, they have any financial means that you can think of. They have all knowledge. As Mr. Arnault, the chairman and owner, always says, there are no bad brands, there are only bad managers. So now they have to fulfill the promises, the claims. They are very low-key, low-profile. I think everyone would agree with that. They are not going around and telling the Swiss watchmakers, we're going to show you how it works. Maybe they think, but at least they don't say it. The challenges are quite different, but the main challenge for them is if they want to grow, they have to make a major acquisition, because by organic growth, they will never go where they would like to be.
Yeah.
They are number 4. I don't think Mr. Arnault is happy to be number 4 in any segment of the luxury industry. He has 2 sons working in the division. Yes.
Prove some commitment.
One who is very popular, le petit prince de l'horlogerie, as I call him, who is Jean.
Yeah.
Very passionate person, very literate about watchmaking. He's young, So yeah, sorry Jean for saying this, but maybe lacking a little bit of experience, but he's learning very quickly. He's extremely smart. His brother Frédéric, who is a little bit, who is less in the media, etc., but he's working. He also wants to fulfill the promises that the group are not communicating so obviously, but anyone understands that they want to achieve. So, Hublot, shall I start with that? No, maybe Tag Heuer.
Yeah, Tiger. For me, just I think that there. I see some positive signs with Tiger, I have to say, in terms of the type of products that I've seen over the last year and so forth. I mean, it went in so many directions before that it seems that it's getting a little bit more in focus.
Yes.
And we see, I mean, and they're investing a lot again in marketing now, being back in Formula One as the big guys over there also.
Yeah.
So but please tell me your views on Tiger.
Tag Heuer, no, but you brought it exactly to the point. It's focusing. They got lost in translation. There are still, my opinion, sorry, Frédéric Arnault, but making a split seconds chronograph at 130,000 Swiss doesn't make any sense for a brand like Tag Heuer. Of course, he's going to tell you that it's a talking piece and They don't even manufacture it by themselves, which is not a problem per se.
No.
But if it's really one of your strategic move, you better align all the success factors. And that's definitely not the way to go. They did very good product launches last year in the Carrera line. The Formula One watches, which they just introduced during their watch week.
But you see, at 4,000 Swiss francs.
Yes.
Formula One, that was 1,000 Swiss francs before. I exaggerate a little bit, but...
it's more or less that, That's the challenging part.
It looks cool, I'm not saying.
It's a very cool watch. Problem, exactly. You bring it to the point. Is there a market there at that price point? I don't know. The market will answer, but it's challenging. It's challenging. That's for sure. The smartwatches, I think they should get rid of them better today than tomorrow. Officially, they won't. Unofficially, I think they would consider it. I know that they would reply that they have a huge team in Paris working on that. I think it was one of the worst ideas that they ever had. It's always easy to criticize from watching the game than playing the game, but it's the same thing at other Swiss watch brands which tried too late to come into a market where the product is not the key success factors. It's the ecosystem around the product, and definitely they are lagging millions of kilometers behind the Samsung, Apple, etc. So give up the smartwatches, get back where you're strong at. You have a strong legacy with car racing. Now they are back into Formula One. Extraordinary opportunity. I'm very critical about the sport itself, but
in terms of communication platform, it's
extraordinary. They can do that only because they have an owner with substantial financial means who can spend 100 million.
Yeah, and they will leverage this throughout different brands of the LVMH groups, which ultimately kind of makes sense. Yeah.
Sure.
But coming back to the smartwatch very quickly, something interesting that you highlight in this report is that the global market of smartwatches sold has remained stable at 70 million, more or less, units between 23 and 24.
I have to be more precise on that. In fact, the entry-level smartwatches are still growing. The smart devices, where you find the Apple Watch, Samsung, Huawei, Xiaomi, etc., are not growing anymore. And especially Apple is losing market share. It's still the dominant player. They are still selling a lot of watches, but for the last 2 years they have sales decreasing. And there is another interesting number. It's the number of Apple Watches which are connected, paired with an iPhone. And that number is more or less constant. And that's not good, because it shows that there are less and less people using on a daily basis their watch. It's still a huge market, don't get me wrong. Even though they will have sold maybe, my guess is that Apple is down 10% this year. That's why last year. That's why Rolex is becoming again the #1 watch brand in value. Apple is down, but it's still a very dominant player. But the name of the game there is, what do you do with that thing which is collecting a lot of data, and it sends that data somewhere? Does it make any sense that you're in your own world, or do you prefer to have an Apple and Samsung, Huawei, or whatever, and you communicate with your computer, with your phone, etc., etc.?
Yeah. Without, even mentioning the difference in terms of price point. It's like...
it's out of this world.
Yeah. For something that is going to be obsolete within the next 18 months.
Maybe not 18, but let's say
24.
No, let's say the obsolescence of a smartwatch is if you can update it to the next version of the operating system.
Yeah.
Let's say at Apple, after 5 years, you can nail your watch on the wall, or just you can continue, of course, to use it, but you are not, you can't update it anymore. We know this from our iPhones, etc. Extraordinary product, but a product which has an obsolescence, which right from the beginning you know that one day it's not going to work anymore. And then you buy a Tag Heuer smartwatch, and you perfectly know that for a certain that watch one day won't be updated anymore.
Yeah. And for 2,500 Swiss franc.
And you can buy for $500 an Apple Watch Ultra, which is really an extraordinary instrument with titanium case and sapphire crystals beside the functionalities that you have.
No, it sounds like a no-brainer.
It's a no-brainer.
Continue with LVMH.
Yes.
Hublot then.
Hublot.
They're part of that little club that not the most highly performing club.
Basically, Hublot lost 1/3 of its sales in 2 years. So last year we estimated that they were down 21 or 22%. They are below the 500 million. They have lost momentum. They have just announced new products in ceramics, etc. They have a very dynamic new CEO. The poor guy, he was moved around from Zenith to Tag to then Hublot. That's not such a good message to the markets, but he's very experienced. Hello, Julien. He's a very experienced sales guy. He has a very good sense, not at all blasting or telling people that they will make the turnaround within the next 12 months. It's a complicated brand. It's getting a lot of bashing on social media, and they don't deserve that. Definitely not, because it's a nice product. The one thing which, on the classic Big Bang, the one thing which I never got friendly with is the slight look-alike with another brand in the Vallée de Joux. You don't know? No, you don't know. You look at the watch, you don't know if you're at Audemars Piguet or Hublot. That's for me, it's a no-go. But apart from that, they do extraordinary products, mechanics. They get a lot of bashing because people say, it's just it's mimicking another brand and the movements are not there. When they restarted, when Mr. Beaver restarted that whole show, of course they started from far away, and quality of the product was not yet there.
Yeah.
Today, it's a very good product. They are very innovative in terms of mechanical movements, in terms of materials. And they, again, the CEO, what he's saying today, Julien Tornard, says we have to go back to the basics to rebuild the trust that we have, etc., etc.
But the thing is that Hublot, part of the success is that it was perceived as being a hype product. The Big Bang celebrating its 20th anniversary, by the way.
Yes.
Time flies.
Yes.
But it was, nonetheless, it was a hype product, and hypey people used to like it. And this seemed to have really faded now. How do you regain your hype?
Yeah, that's the challenge. It's reconnecting with the most important people. We talked about the Paneristi before at Panerai, the Hublonisti at Hublot. Those people, you have to convince them again that you're on a positive trend. You have to meet with them. You have to surprise them. You have to come up with incredible things. The new CEO has understood that perfectly well. I'm not saying that the outgoing one had lost that, but after 20 years, you are probably getting a little bit less excited in the morning when you get up. I don't know, maybe you still are, but probably a little bit less. So they have to reconnect with that. That's the challenge.
Yeah, it's a big challenge for Mr. Tornard.
It's a huge challenge,
Yeah.
yes, and he's aware of that. If I dare to say, the challenge at TAG is big, but at Hublot it's huge. And not talking about Zenith.
Yes, let's go there.
Okay. So Zenith, the tragedy there is that the watch market sees something that has never existed.
Interesting.
Okay.
Well, an interesting, yes.
They have expectations toward a brand which has never had the history that they think that brand had.
Yeah.
It was a movement manufacturer, and by the way, it was a brand. I think Zenith at best has the potential to do maybe 150 million sales. They were up there with Mr. Tornard.
Yeah.
Now they are back just above the 100 million. If they keep that, it's already good. If they are profitable, even better. But it's a brand. People always tell me, Zenith is one of the nicest stories, etc. No, it isn't. I'm sorry. You are mistaking a movement manufacturer for something it has never been. They have won a lot of chronometric competitions, etc., etc. So they should concentrate on that. And
But that manufacturing dimension will apparently be put forward again.
Yes.
I mean, because it's going to supply more the
Yes.
brands of the LVMH, which
will
makes
kill
sense.
the
Yeah.
brand itself further,
Yeah.
because it will take away its only legitimacy.
Yeah.
Because if you start communicating more on the fact that Zenith is the maker of the El Primero and that it supplies the others, etc. So people will ask, but why in the first place you're still selling?
And you remember, I mean, they used to do those kind of also interesting technical pieces like the Columbus and things like that,
Yes.
which had brought them quite a lot of legitimacy and interest. And
But if I may, and that's the third time I do that comparison, again, Kern, Breitling, you go all the way through. You lose some people, but you gain a lot more people if you do the things the right way. At Zenith, they have done, I don't know how many back and forth and back and forth and yes and no, and then we do this, but we do that as well, and then, you confuse people. And at the end of the day, you lose everyone.
Just this image of Mr. Nataf just came back talking about going.
That's another industry legends.
Those strange days.
Quite bigger than nature.
Yeah. So with LVMH, I mean, it's there's a lot of will to develop things because, like we were mentioning before, it's underperforming under the LVMH standard, that's for sure.
Absolutely.
And they have a point to prove.
And then they have two strategies. They have the strategies on the volume side, the brands we just spoke about, mainly Tag Heuer and Hublot. And then they have that part, Louis Vuitton, La Fabrique du Temps, with whom I have a personal relationship, and Roth and Genta. And there, that personal relationship is that the founders of La Fabrique du Temps were also the ones running part of the show at Laurent Ferrier with Laurent and me on the side or on the back. They do an excellent job. It's taking time, probably more time than they had expected. They have set up a magnificent infrastructure in terms of manufacturing. They have nice brands, niche brands, because Roth and Genta are never going to be blockbusters. The Louis Vuitton watches, well, basically they have to align everything to be successful. I don't think as of today they have done all their homeworks, especially the last mile with their clients, because I dare to say that the people selling the Louis Vuitton watches in Louis Vuitton boutiques are not quite up to the job. It's criticism, but positive. Any brand is facing this at some point. When you sell a leather bag, you don't need as many mechanical or technical references as when you sell a mechanical watch. And you know, selling a three-hander at 20,000 or 19,500 euros is quite a challenge. It's a very fine watch, very nicely executed, but it's quite daring.
But with these three brands that you mentioned, for me, they're playing on the kind of on the territory of the independence. It's part of LVMH, but in terms of the way it's the thought process, the way they develop their products, and the way they talk about it. Also, for me, I make the parallel more to the independent brands than to the big players of Hublot, Tag Heuer, or whatsoever within that group. It's like it's kind of a side division in itself. A very legitimizing division, that's for sure.
Absolutely,
for sure. But it's it seems like there's a different approach with different goals with these ones.
Definitely. Totally apart from the rest, creating the legitimacy, that's true, very much true. They see themselves as incubators of independent watchmaking. They have set up that Louis Vuitton, that LV watch price. I'll say something about this. It's a very good idea. Very good. Kudos to Jean Arnaud and his team. The execution, I think, is less good. Why? Because if you promote the new watchmaking or the talents of the future, because that's the way I see this price, because otherwise you call it the other way around, and by the way, you don't give as a price mentoring, because a guy like, let's take a very precise name, Mr. Strehler, who is probably more or less my age, doesn't need, I think, because he's a brilliant watchmaker, he doesn't need any more mentoring. He was one of those competing. That's one problem I see. Young, don't take all. He can be 40 and start his life as a watchmaker. That's one problem. The other problem is the jury, or how they call it, the expert panel, because that was the running joke on social. That's maybe the only time I looked at some running gags on Instagram, etc. But you know, almost anyone, usual suspects in the watch industry, and I'm not going to name them, they're all there. Does it make sense? I don't think so.
Well, there's a lot of political games, I think, that is played with this to benefit, indeed, what we were mentioning before, because it legitimizes what they're trying to do on one side. And on the other side, I think it could be perceived like kind of I'm sorry to say so, but I mean some kind of predatory move, you know?
Yes.
And it's like, okay, we're very kind, but at the same time, you know, we're overlooking things very carefully, and who knows what can happen. It's very smart. I'm not saying this.
The idea, Jean's idea. Sorry, I'm not his spokesperson, and I am there to interpret a little bit what they're trying to do. Basically, they are trying to position themselves as incubators of independent watchmaking. They said it rightfully. That's a very smart idea. The downside of it, of course, it can be taken as a threat, and you know, there are many people when they meet with the Arnault brothers are very nice to them, etc., etc., and as soon as they turn their backs, they think, oh, those are not going to succeed because we don't want LVMH to be a major player in our own industry. They can sell champagne, leather bags, whatever. I think they will succeed in the end, because they have a vision, they are very smart, and again, they have all the financial needs it takes. The price, that's maybe not the best idea. The work they are doing with Roth and Genta is very nice, really full of praise with what they are doing. They did that, what was it called, the tambour convergence, very nice. Because the smart thing about that is that they imply that they have a legacy in watchmaking, whereas they don't. We all know that Louis Vuitton didn't make watches 100 years ago, but they imply that they have because they play with very, if you are into watches, you instantly understand that those are the codes of pocket watches of the beginning of the end of the 19th century. And that's very smart. That's very smart. But yes, some people are afraid that they are taking too much space. I don't think so. And I wish their price changes a little bit so they gain credibility.
Mm-hmm. Well, there's a few things that they do that I think is kind of a mimic of what Harry Winston and Max Büsser did some more than 20 years ago with the Opus series, you know, putting forward some of these independent watchmakers of the time that have all become more or less stars. Legends, superstars today.
True.
But there are multiple interests I see, politically, marketing-wise, product-wise, and everything. I mean, but it's probably the intent is positive at the very start. But I mean, we need to see where that will go. Lead to. Yeah. But indeed, I mean, we know that there's this envy of making themselves a bit more respected, I would say, as in the watchmaking family, if we can say so. Yeah. All right. So now let's talk about something positive. Swatch Group.
Sorry, Mr. Hayek, for laughing. It was not about, because I'm an ex-Swatch Group.
Yes, you are.
Shouldn't laugh in the first place. So yes, it's negative since we started that report. We have a chart somewhere where we are showing the evolution of market shares in terms of value and in terms of volume. And you're clearly seeing that Swatch Group year after year is the main market share donor.
Yeah.
So they are losing consistently market shares. Of course, Mr. Hayek will tell you, it seems that I'm one of his favorite industry analysts. So
what an honor.
It's an honor. He would probably tell you that probably I don't look at the same picture. The thing is, they are listed, so they have to publish their consolidated numbers. And we have to break down then the numbers. And you can trust me that I have quite some reliable sources telling me that our estimates are not that far from the real numbers, and the real numbers are not good at all.
Yeah.
And the one thing, of course, that Mr. Hayek would say is that, yes, you know, it's the high end, overperforming, we are rather in the middle range. But guess what? They have Breguet, finest name of watchmaking, the inventor of the tourbillon, etc., etc. The brand is just, you know, year after year decreasing, losing. You don't hear the name Breguet anymore in any get-together of watch collectors, except for the bad reasons. Everyone in the watch industry is desperate to see the brand getting back on its feet. They have a new CEO, Gregory Kissling, excellent product man from Omega. He has done a tremendous work at Omega. Yeah. He will be able to fulfill what he should be fulfilling? I doubt. It's a very complicated management system within the Swatch group. So Breguet, definitely not good. Blancpain, too much depending on the Chinese market, so complicated. Very good product initiatives in recent years on the 50 Fathoms, but it's becoming more and more a mono-product brand, more or less. Does it have all the potential to grow there? I'm not so sure. They have an internal competitor called Omega, and it's, you know, that's already one part of the problem. You have a Seamaster 300 meter, and then you have 50 Fathoms competing on the same market segment. I mean, that
especially that, I mean, Blancpain, when Biver relaunched that, and for quite some years, I mean, it was really more on the Villeray type of collection, more on the classical type of watches that you would expect from that brand. And that shift, I mean, since the L Evolution or L Le Monde, I can't remember the name of the thing. I mean, I think the message got a little bit distorted there. But yeah, it's a bit sad to see, to witness this. Yeah.
Terrible.
Yeah.
Terrible.
And coming back to numbers and actually a number that you see on the balance sheet of the Swatch Group, the one that kind of, for me, is one of the most alarming one, is that their inventory is exceeding their turnover.
Yes.
They have more stock than their actual turnover.
Yes.
That's
quite concerning.
Yeah, that is quite concerning.
And of course, Mr. Hayek has an answer. He says that's mainly due, it's about 1/3 of the overall value is precious metals and precious stones, which is true, it's a fact. But you have to know that, yes, the gold of price increases a lot, the last 12 months, 47%, which is huge, never seen. When I started in the watch industry, we paid 12,500 for a kilogram of gold. Now we are up at 85,000 Swiss francs for a kilo of gold. So it's a huge increase, I would agree. But it's exactly the price category which should perform the best.
Yes.
It's exactly the price category where you sell through immediately. I know for a certain that at Omega, for instance, when they do a special series of Speedmaster full gold bracelet and watch head, it sells through immediately. Very high price point. They just launched a platinum on platinum Speedmaster, 100,000 Swiss, or just around 100,000, was sold through immediately. My point here is, no, Mr. Hayek, it's not an explanation, because the time to market of those products is a lot faster. It's a sell-through. Yeah. It's very popular. It's what the market is looking for at Blancpain, at Omega, at Breguet. The gold, the precious metals watches should sell a lot better. No, it's poor. It's poor forecasting. It's poor product management. It's poor production management. It's a lack of realism, of however you want to call it. You know, the whole group is set up to produce 20 million watches a year. Guess what? the whole industry doesn't sell anymore 20 million watches a year. The whole group is still focused at a Swatch, the brand, selling between 12 and 15 million watches a year. Guess what? Even though with the tremendous and incredible success of the Moon Swatch, they sell less than 5 millions and so on and so on and so on. And Tissot is not anymore selling the millions they were selling, and neither is Longines, etc.
But Tissot, I mean, for them, good, I would say, positive points. I mean, if you compare Tissot 5, 6, 8 years ago to where it is now,
definitely
they took the right path there.
Definitely, even though they are way below where they were in terms of sales of top line.
At one point, I could see them really go down because they were really. But now they've done a few right things there.
PRX, extremely popular watch. If I dare to say, last year's number are a lot selling because they opened up a lot of doors around the world. We are talking hundreds, if not more than 1,000 new doors.
Wow!
So you can imagine how many watches
you need
ship
to provide.
Out, and then you can tell your boss that you achieved an incredible increase. But I must still credit them with a good product strategy. They will be well advised to. How shall I say that? First of all, to clean, to groom a little bit their product offering. They have way too many SKUs in their product collection. Then the whole merchandising on the point of sales. There are way too many watches. The boutique concept is very nicely executed, much better than many brands up there. I'm not going to name them because I have done enough bad critics today. That's the positives on Tissot, and I believe Tissot is there to stay. They have the opportunity in India, like Longines, a lot of potential there. Excellent product offering for what you pay for. The PRX, as we said, very nice watch. Quartz or mechanical.
Yeah, absolutely. But overall, indeed, Swatch Group not doing so great. We don't see clear signs of things improving overnight like this with Breguet or whatsoever. But I mean, we wish them well, of course, but I mean, it's situation is a little bit complicated. Just very, very quickly, talking about another group, if we can say so, about Sowind. I mean, Ulysse Nardin and Girard-Perregaux, there had been quite a lot of expectations on these brands with their new management of reviving a little bit, refreshing the brand and so forth. They've done that. They've spent a lot of money on marketing. I mean, we see them a lot. Nicely done, nicely executed, but ultimately it doesn't transform.
No. At least it doesn't transform with Girard-Perregaux. They have just appointed a new CEO dedicated to that brand. They had done that last year for Ulysse Nardin, the sister brand. It's a complicated story. Anyone in this industry with whom I consider being a specialist, or at least who has a track record with some successes, is telling me that if he would have done that by restarting only one brand at a time. As I always say, one brand is complicated, 3 brands, and that's Breitling. We didn't speak about that, but they have another one, and the one below, then it will become a little bit more complicated. But at Girard-Perregaux and Ulysse Nardin, I think it was a little bit daring. They spent a lot of money trying to restart both brands at the same time. One CEO for both brands, Patrick Prugnot, too daring probably. Girard-Perregaux experienced a little bit of positive dynamics with the Laureato when there was the hype, as we said before, on the sports chic market segment, product segment. It's going to be complicated for Girard-Perregaux to come back to a solid, sound foundation and then restart with strong products. The Laureato is still a nice product.
Sure.
you should dump it, but unfortunately, it's going to take a lot more time. Ulysse Nardin is more successful. There, they took quite a daring angle, and maybe it works out, maybe not, but I would say they have a good chance to succeed with the Freak being really the talking piece and the mate piece. It's not so easy to sell because, it has the very special, very unique aesthetics. It's a very technical product.
Yeah.
But I wish they succeed. They are not yet there.
Yeah. No, for sure. But it's I know it's a little bit tough. I mean, for the team over there also and so forth. So again, we wish them well.
Yeah,
for sure.
Definitely.
For sure. And now, if we put kind of all the independents in the same family, and if we can quickly jump from one to the other, I mean, you've said this already before. I mean, independents, they benefit from a huge exposure in proportion to what they economically represent, but they're there to, they set the hype, they set the trends. People that are a bit tired with the classical players and things like that, now they feel like it a bit more unique or more special by going down the independent route. So everything has gone rather positively for most of them over the last few years. They're the biggest winners of the COVID situation, I would say, because people started to look at that scene. So overall, what can you say today about the independent scene?
That there are very few brands achieving to scale. We spoke about if we still can call it an independent. That's a very vague term. In the mind of watch collectors, independent is the artisan watchmaker, angling, etc. No, Richard Mille, Frank Muller, those are the two absolute success stories. François-Paul Journe is one, MB&F is one, and one by now everyone has understood that I like them a lot. But it's basically because I have a lot of respect for what they have achieved. It's H. Moser.
Am I surprised? Am I surprised?
And I'm not wearing a Moser today. Or at all. Yeah. Now, Moser is one of the very, very few independent brands showing that you can scale your business, remain cool, remain surprising. You get new customers, but you keep the loyal customers. I visited the manufacturer with a group of people, and some of them were really Moser aficionados. They were looking at Edouard Mellon like it was, the Aga Khan or whatever. I think that's given for a very few brands. The other ones will remain, at quite lower volumes, but they're bringing fresh air, a way of communicating which sometimes is a little bit cooler. But now and everyone knows what I think about all this. There are way too many brands being launched. I shouldn't say that because once upon a time I had my own brand. Some are definitely lacking any relevance in terms of horology, of legacy, of however you want to quantify what they bring to the table. They shook up the whole game, that's for sure. That's and they still do. That's very positive. Some are just growing year after year. I mean, when we look at our friend Max Busser at MB&F, 47 million sales. I mean, kudos. It's it's one of those where people were saying, MB&F now it's gone. They have had their success, but etc. But year after year, Max is there coming up with new products. He's very rational. He's someone who is very down to earth. He's an engineer by training.
I was going to say, he's an engineer, yeah.
He's very shtak, boom, tak, but he plays he's acting very well. He plays his part at perfection, and the products are still very cool. You like or dislike, but I mean, in terms of quality and of mechanical achievements, they are very interesting. Yeah, and then there are the many others which are making, I don't know, 1 million sales, 2, 3, 4, who are never going to grow substantially. And my main point here is all this is very nice. All this deserves kudos and applause and respect. But the problem is all this volume, or the challenge, not the problem, the challenge is their consolidated volume of all this market segment is below the 2% of the whole Swiss watch industry. So somewhere, somehow, someone has to produce volumes, because as I said many times recently, an industry can't live just of the high end.
Yeah.
The car industry is not only about Lamborghini and Porsche and Ferrari, it's also about Volkswagen, Seat, Peugeot, and name them, Fiat. So you need volume.
Yeah.
And the new part of the independent watchmaking, which I see, which is very interesting, are all those micro brands coming up, and some have very cool product and brand concepts. Really, it's very interesting to watch all these guys moving around. Some are just copy paste. You see that they have seen, oh, this works, we do the copy paste. One of my activities, I'm not doing any advertisement here, but one of my activities is to create brands and develop products, private label. And I have every week about between 1 and 3 requests for that kind of brand. And I'm not really, at least, not the best at this. And there are people doing this very well, and yes, that's interesting. It's bringing fresh air. You had before Code 41, who wanted to reinvent the way they were selling. It worked out for quite some times, then it went down. Now they're trying to get back where they were. You have Bayot, my friend Bayot. But you know, he just announced that he was certifying his first watch at TimeLab at the Chronometric Observatory of Geneva.
Okay.
Observatoire chronométrique de Genève. Chronometers certified for less than, if I remember right, less than 800 Swiss mechanical movement. See, you know, those guys, they provoke somewhere. They provoke because they say, and now I'm going to give a nod to someone whom I'm not talking very often about. Ben Clymer at Rinki yesterday published an article, and he said those are the things which should be better in the Swiss watch industry. And one of them, he says, and very rightfully, and bravo Ben for saying this, he says why, and I'm not going to name them, you can watch the video or read the article, is why do people call watches chronometer which are not certified? And kudos for saying this. And yes, if small, new, micro, niche, however you want to call them, allow us to go to the better, to the more precise, the better finished, the more interesting, etc., then they have a role to play.
All right. So we've talked about numbers, and to end up this session, if we can call it like this, what are for you, the biggest trends that you can anticipate for 2025?
The biggest trends? That's a tough one. So, in terms of markets, definitely the US. Everyone has his eyes towards the US. But guys, don't do the same mistake as with China. There is not only the US, there are many other markets.
Mexico, for instance.
Thank you for bringing up Mexico. Mexico is growing year after year. You have many passionate watch collectors there. There is a fantastic exhibition. My friends do the CR. It's a very good exhibition. You meet cool people. You can sell there. So don't forget, don't all run towards the US. There are still other markets, other trends, back to more normal prices in terms of not bringing up the price increases once or twice a year, even though we have to the challenge of adverse exchange rates, increasing precious metals prices, etc., etc. So somehow we have to cope with that, unless we want to cut back on the margins, which is doable to a certain extent. And then, you know, I don't expect any changes from what we have seen the last few years. We will sit here together, hopefully.
Hopefully,
I wish we do. In 1 year's time, and again, I will tell you that the market got more polarized, more premiumized, etc.
Well, thank you for sharing all these very interesting information brought out in this interesting report, which is not fully public.
No.
But
it's not public at all. In fact, it's meant to be published and released only to the customers of Morgan Stanley. But we all know that it's a marketing instrument, and we are very happy if many people read it and talk about it and debate.
It's always a pleasure. And I would like to congratulate you, because I think we broke our record.
We did.
I think so, yeah.
Thank you. Really, we did. We are up, what, 1.5 hours?
Almost a nice price increase there also. Yeah, inflation is going everywhere. But yeah, no, one day maybe we'll manage, but I don't think so.
No, we don't.
I didn't see time fly. It was time flew. It was very.
It's about passion.
That's right.
And viva watchmaking.
That is correct. It's all about pleasure. Well, thank you so much for been with us, and indeed looking forward to next year's edition, but I think we'll bump into each other a few times before that.
I think so. Thank you.
Thank you so much. Thank you for your patience. I hope you enjoyed this, and see you soon. Bye, guys.
Bye.